Hey guys, thanks for tuning on in. Before we get started, I just want to take a little minute and talk about our free Facebook group called Credit Score Hackers, where you can get answers to your credit questions from experts in the field as well as people in a similar situation. So, thank you guys so much once again for tuning on in, and I hope to see you on the inside. Hello and welcome back to the Credit Agent Show. On today's episode, we're going to be talking about the average credit card APR. What exactly is credit APR rates? How do they affect you? And more on today's episode. If you've ever left a balance on your credit card after you make the said payment, you'll notice once it revolves into the following month, there's going to be a little bit more added on to the balance. That is what we would call the APR interest, aka just the interest of the accruing balance over time. It's usually listed as a purchase interest charge, or even sometimes known as a interest charge on pay over time purchases, depending really on your holder or lender for said card. Just remember, paying in full every single month is also a really good tactic to really try to avoid these types of interest rates as well. But also remember, credit cards are special in the fact that they are a type of revolving credit. It kind of is the nice thing when it comes to credit cards. So let's take a look at your APR rate, types of APR as well, and what you can do to really kind of improve your financial situation. So kind of once again, diving back into it, interest really is the price you pay for borrowing a certain amount of money over a set period of time. This APR rate also applies to things such as mortgages or auto loans, kind of more along the lines of those long-term type loans as well. It's not specifically only just for things like revolving credit cards. If we're talking specifically, once again, about credit cards, though, the interest rate is usually expressed as a yearly rate. This is oftentimes going to be tied to, say, a 14% APR rate, or it can even go as high as a 25%. And once again, all of this is going to be tied to your credit score, which, if you've seen our previous videos in the past, you'll recognize that having a good credit score lowers that kind of average APR rate. And really, the APR rate is where you're going to save the most amount of money over a set period of time, especially if you're keeping these loans for a long period of time, which is once again something we heavily recommend. Keeping kind of all of these lines of credit as long as like 7 years can really improve and bolster your credit portfolio. But also, that is another reason why you want to get the lowest APR rate possible. So kind of moving on to some of the average APR rates for a lot of the separate categories of credit cards, and this is all according to Bankrate and WalletHub.com. It is going to be, for the national average, around 16%. Lower interest is going to be right at 12.94%. Cashback credit cards are going to be an APR average of 16%, while balance transfers are going to be 14%. Business credit cards are at 14%, and then student credit cards are going to be around 17%, maybe just a little bit below 17%. Airlines are going to be kind of in the mid-range side at around 15%, where reward credit cards are going to be around 16%. Finally, kind of moving into specifically the credit scores you have and what you can expect. If you have an excellent credit score, aka anything above a 740 to 750, you can expect around 13%. Where a good credit score, kind of just below 750 to maybe around 690, will be around 19%, where fair, kind of in the 600s, is 22%. Bad credit, anything below that 600, is going to be 26% average APR. And finally, so those like store credit cards that you can get are going to be around 24%. And then finally, also secured credit cards. Those are at 18%. So ultimately, if you apply for store credit or have bad credit scores, you can expect higher interest rates. But also, these are all subjective as well. So make sure you really read the fine print when you're applying for specific lines of credit cards, because let's face it, there's always going to be outliers when it comes to data. So kind of diving back into the discussion of interest rates versus APR. What really are the specific differences? Well, depending on which type of credit you have, they can be a little bit different. or they can also be extremely similar. It's very circumstantial in that sense. But think about it like this. If an interest rate represents the cost of borrowing money from a dealer/lender, you'll usually see this in the form of a percentage of the total balance, whereas a APR includes interest but also includes things like the lender's fees, closing costs, insurance, and these are just really to name a few. There's a lot of factors that kind of go into APR rates, and credit cards really don't have these fees, so your interest in APR for specifically credit cards are going to be very, very similar. So an important note for whenever you are applying for any type of credit card is really take a look at the brochure. These are required by the lender themselves, and these are going to list all of those kind of quote-unquote hidden fees that they don't really advertise when kind of showing you the card, and gives you a ballpark estimate on your kind of APR rate that you can expect. Also, if you're going in person, be sure to sit down and talk with them, kind of talk about your credit score, and really get a more accurate kind of representation of what your APR rate is realistically going to look like. Because a lot of the time, whenever you get approved for a card, they give you a range between, like, say, a 13% and a 25% APR rate, which, let's face it, that is a big difference. So kind of narrowing that down a little bit and really figuring out what you're going to be expecting to pay is a really good idea, and also just helps you stay more informed with the card you're currently kind of thinking about getting. So diving on into the different types of credit card APR rates is the first one being the fixed APR. This is going to be the most quote-unquote traditional APR that you'll get, and like the name implies, it's going to be kind of a fixed baseline rate issued by the bank. They really kind of use these as a baseline for a lot of different types of loans as well. Things, like mortgages, other types of loans, auto loans, and other types of revolving credit as well. So honestly, when it comes to APR rates, and especially fixed APR rates, you don't really need to expect them to change unless you make a late payment. That is the only circumstance that a fixed APR rate will in fact change while having a card or loan under it. Talking about the second most common type of APR rate is going to be the variable APR rate. And like the name implies, it will change, and a lot of times it will change very similarly to a fixed rate, where if you make a late payment, but also any credit cards that kind of have that introductory period, if you'd call it that, where they say, oh, you get 0% APR for the first 12 months. That is what is called a variable APR rate as well, them changing it after a set amount of time. And generally, this is an incentive to really kind of lure people in to use the card. It's AKA a bonus, if you will.